Every day, Americans hear headlines saying the economy is doing great, the stock market is strong, unemployment is low, GDP is growing. But then millions of ordinary people walk into grocery stores, pay rent, check their bank accounts, and wonder one thing: if the economy is so strong, why does life still feel so financially difficult? Why are people working harder, carrying more debt, and feeling more stressed than ever before? The truth is, there's a massive disconnect between economic numbers and real everyday life in America. And in today's video, we're breaking down why the economy can look strong on paper, while millions of Americans still feel financially stuck. Welcome back to The Dollar Pilot. Today we're talking about one of the biggest economic contradictions in America right now: why the economy feels strong, but people don't. Over the past few years, Americans have constantly heard positive economic headlines. The unemployment rate stayed relatively low. The stock market recovered strongly. Large corporations continued reporting major profits. Consumer spending remained high, and official economic data often suggested the U.S. economy was performing surprisingly well. But at the exact same time, millions of Americans felt financially exhausted. People kept asking, if the economy is doing so well, why does everyday life still feel so expensive? Why are so many households stressed about money? Why do so many people feel like they're falling behind? The answer is complicated, because there's a major difference between how economists measure the economy and how ordinary people actually experience the economy. One of the biggest reasons is inflation. Even though inflation rates slowed down compared to the peak levels after the pandemic, prices themselves remained much higher than before. That distinction is extremely important. When inflation slows, prices are still rising, just more slowly. Most prices don't suddenly return to old levels. Groceries still cost more, rent still costs more, insurance costs more, fast food costs more, healthcare costs more, utilities cost more. And for millions of Americans, these higher prices permanently changed household budgets. This is why many people feel frustrated when they hear positive economic news, because their personal reality feels completely different from the headlines. Another major factor is housing. Housing costs exploded across much of America over recent years. Home prices surged, mortgage rates climbed sharply after the Federal Reserve raised interest rates, and rent prices increased dramatically in many cities. For younger Americans especially, home ownership now feels far less achievable than it did for previous generations. Even people earning good incomes often struggle with housing affordability. And because housing is usually the largest monthly expense for households, rising housing costs create enormous financial pressure. There's also the issue of debt. Americans are carrying record levels of credit card debt. Interest rates on those balances became extremely high. Student loan payments returned for millions of borrowers. Auto loan payments increased, and buy now, pay later services expanded rapidly. This means many households are technically employed and earning income while simultaneously feeling financially trapped by rising monthly obligations. That creates emotional financial stress even during periods when the broader economy looks stable. Another reason people feel disconnected from the economy is wealth inequality. A large portion of stock market gains primarily benefit wealthier Americans who already own investments and assets. Meanwhile, working class and middle class households often rely more heavily on wages rather than investment growth. So when the stock market rises, many Americans don't personally feel richer. In fact, some people feel poorer because their living expenses rise faster than their income. This creates what economists sometimes call a two-speed economy. One part of America benefits strongly from asset growth, while another struggles with rising costs of living. Social media also changed financial psychology. People constantly compare themselves to lifestyles they see online: luxury apartments, expensive vacations, designer products, luxury cars, high-income influencers. This creates enormous pressure and financial anxiety. Even financially stable people may feel unsuccessful compared to unrealistic online lifestyles. Another important issue is wage perception. Technically, wages increased in many industries over recent years, but psychologically, people often focus more on purchasing power than raw salary numbers. For example, if someone earns more money than before, but groceries, housing, insurance, and healthcare increased even faster, they may still feel financially weaker overall. This is one reason many Americans say they feel poorer despite receiving raises. The emotional experience of money changed dramatically after inflation surged. Another hidden factor is job insecurity. Even during periods of relatively low unemployment, many Americans still feel uncertain about the future. Layoffs in tech industries, artificial intelligence replacing certain jobs, automation, corporate restructuring, contract work replacing stable employment. All of these trends create financial anxiety even when job numbers appear healthy on paper. People don't only care about having a job today, they care about whether they'll still feel financially secure 5 years from now. And many Americans no longer feel confident about long-term stability. Healthcare is another huge issue. Medical costs remain one of the biggest financial fears for American households. Even insured families often worry about emergency expenses, surgeries, prescriptions, or unexpected bills. This constant financial uncertainty affects how people emotionally experience the economy. And perhaps most importantly, Americans now spend far more on basic necessities than previous generations did. Housing, healthcare, childcare, education, insurance, transportation. These core life expenses consume huge portions of household income. That leaves less room for savings, investing, vacations, and financial flexibility. This is why many middle-class Americans feel trapped financially despite working full-time jobs. Now, here's the important question. Is the economy actually strong or weak? The honest answer is both. Certain parts of the economy are genuinely performing well. Corporate profits remain strong. Some industries continue growing rapidly. Consumer spending has remained surprisingly resilient. But underneath those positive numbers, millions of households are still struggling with affordability, debt, and financial pressure. And that's the key difference. Economic statistics measure systems, but people experience daily life emotionally. If rent takes most of someone's paycheck, they won't feel optimistic because GDP increased. If groceries keep getting more expensive, people won't feel financially secure just because the stock market rises. At The Dollar Pilot, we believe understanding this disconnect is one of the most important ways to understand modern America, because the economy is no longer just about numbers on charts. It's about affordability, stability, debt, stress, opportunity, and whether ordinary people feel like they can realistically build better futures. The truth is, many Americans are not imagining their financial struggles. Life genuinely became more expensive across nearly every major category at the same time. And until affordability improves, millions of people may continue feeling financially squeezed, even during periods when the overall economy appears strong. Stay informed, stay disciplined, and remember, understanding the economy is the first step toward protecting your financial future.